Good afternoon and welcome to HYCM's webinar, FX Week Ahead Live Market Analysis with myself, Giles Coughlin, the Chief Currency Analyst here at HYCM. Especially welcome to you all. Hello, if you've just joined us for the first time for this webinar. Hi guys, hi Nathan, Salvatore, Genev, good to see you. Good to have you on board for the coming week ahead analysis. Just as folks are coming in, just want to make it clear that as we're looking at different trade setups or trade ideas, this is not a signal service. So though we'll be talking about lots of different currency pairs, how we're expecting different currencies to react in certain situations, the whole idea of these workshops tomorrow and this webinar today is all about education, so that you guys can make informed decisions for yourselves, so you can start to see how a professional trader goes about looking for opportunities on a day-by-day and a week-by-week basis. So I just want to go through that to make it clear. Don't forget, you've got a question panel on the GoToWebinar control control panel that you have. There is one box which says questions and chat. So if you want to ask any questions, just type a question in the question panel and we can get to that. And don't forget, tomorrow we'll, if you've got any trades you're looking at or anything you want to talk about, please do just pop it in the question panel. Now I'm just going to check that. Oh, there we go. Main screen showing now. So I hope that's all clear. If you've got any problems seeing or hearing, let me know, but I think that's okay. Because someone just let me know if they can now see the screen okay. If you just pop it in the question panel, that would be great. I'm hoping that's coming through clearly now. I think it is. Yeah, it seems to be okay on my end. Okay, guys. Yeah, Joseph, that's great. Thank you very much. Super. Right, well, let's crack on straight away. Now, the first thing I want to draw attention to is what's driving the pound now. You know that there's been an extension granted for Britain to leave the European Union for 3 months, and the new deadline has moved from October the 31st now to January the 31st next year. So the focus of the market now has shifted from deal no deal scenarios, and it's all now about the general election that's been called. There's a general election called for the 12th of December. Now this is the current mood. Now, if you can see here, this is a poll of polls from Politico, and it basically takes a spread look at all the different polls there are. And according to Politico, at the moment, the Conservative Party is ahead with approximately 38% of the votes. Now, as long as the Conservative Party remain ahead in the polls, you can expect the pound to be bid. So I just want to show you a pound chart. So looking at the pound chart, you can see near term, we've just reached this 1.300 level. Now, I think it's going to be hard potentially to get over that level at the moment. But any pullbacks I'm expecting to be bought. There is a presence of buy orders here in the market and down here in the market. So with the key to the pound at the moment is what's happening with the Conservative Party. As long as the Conservative Party are in the lead with the election polls, then you could expect the pound to be bid and supported. Now, I'm going to give you a link. I'm going to send you a link to all of you guys. So I'm going to send it to Jodev. Now, Jodev, there's a link, and I'm going to send it to everyone. That link that I sent you is the source of this poll of polls, so you can follow along with it day to day, and see what the polls are doing. But expect that to start moving the pound. Now, Labour, if that lead shrinks, if they get closer to the Conservative Party, either Conservative Party loses and Labour starts moving up, then expect the pound to be sold off. Now, the Liberal Democrats, they would favour Britain to remain in the EU. So if they suddenly started to lead in the polls, then what I would expect is in that scenario, I would expect the pound to be bought on optimism that Britain, that Brexit will be reversed. Now that's unlikely to happen. It's also, I think it's relatively unlikely for Labour to start pushing ahead in the polls as well. So the most likely outcome is the Conservative Party to remain in the lead, as long as they do expect the pound to bid. So that's just one thing I wanted to quickly cover, because it's kind of a new shift that's taken place. Now, these are the main issues we're looking at. The RBA stuff for the key data coming out of New Zealand. The pound's got an interest rate decision from the Bank of England. We've got CAD data, and we've got risk trades. So I just want to start with a risk trade. First of all, when I wrote this, program for this week, last Friday, I made a note of watch for changing sentiment on the US-China phase 1 trade deal. Well, at the moment, sentiment is very good for risk on. There's been a number of very positive comments out of the US and out of China that a trade deal between the US and China, a phase 1 trade deal, seems to be virtually there, apart from it being signed. So there's been a number of comments from senior US and Chinese officials, and there's also another comment that out of the US that the EU car tariffs might be suspended. So that's more good news. So as a result of this good news, the Japanese equity markets were on holiday, but we saw the Hang Seng, the Shanghai Composite, both of those markets were bid, and the European markets have just been a sea of green this morning. We've had the DAX up over 1%, the UK FTSE 100 up over £1, up today. Hang on, I'm just going to quickly just want to quickly reply to a message. Sorry about that. Yeah, so it's a lot of positive risk tone in the market. Now, when you get positive risk tone, this is what you can expect to see. You can see positive New Zealand dollar and Australian dollar, and that's what we're seeing. We're seeing bids in the New Zealand dollar, and we're seeing bids on the Australian dollar, right? If it's then we're seeing negative Swiss franc and Japanese yen. So at the moment, we've got strong Australian dollar, strong New Zealand dollar, weak Japanese yen, weak Swiss franc. This is all on optimism about the US-China phase 1 trade deal. And there was news out over the weekend that China and New Zealand are going to be looking at reviewing and improving their free trade agreement. So that's why we're seeing particular strength in the New Zealand dollar. So, I'm expecting New Zealand dollar, Japanese yen buyers on pullbacks, and New Zealand dollar, Swiss franc buyers on pullbacks, and Australian dollar, Japanese yen buyers on pullbacks, and Australian Chinese, Swiss franc buyers on pullbacks. So that's just to make it clear, that's all that's happening with that US-China phase 1 trade deal. So that's what I'm expecting to see in the market. Now, let's now go to look at the week ahead, and let's look at the calendar so we can get some more information for us. So I'll just pull the calendar out over. Okay, so the first thing to draw attention to is ECB's President Christine Lagarde is speaking this evening at 6:30 p.m. GMT time. This is important. President Christine Lagarde is the new ECB president, taking over from Mario Draghi. Now, the market will be eyeing this very carefully to see what she says. Does she change what Mario Draghi's been doing? Does she suddenly say we're going to be, cutting interest rates further? Are we increasing quantitative easing? Or is she, as expected, to make a larger call for what's called fiscal policy? In other words, that government support would help the euro rather than just monetary policy, which is limited to essentially the bank's remit. So that's what she's expected to say. Either way, look at this carefully. 6:30 p.m. I'm going to pop a website in for you. Okay, if you go to this website will help you with some of the analysis around that time. Okay, so if you go to that website, it should help you. But be aware, if you're trading the euro, a lot of volatility potentially this afternoon. Now, the RBA rate statement, again, a very important rate statement. The expectations for the Reserve Bank of Australia is that they stay on hold. Okay, that's what's expected. That no rate shifts happen, that it's just a straight keeping the rates on hold. However, data has been a little bit better out of Australia recently. And the question that's in my mind, and that will be in the market's mind as well, is what direction is the Reserve Bank of Australia heading in? And Governor Lowe spoke about reaching a gentle turning point in the economy recently. So the market would say, well, how well is the Australian economy doing? There's been some good labour data out of Australia recently, and it's been very supportive for the Australian dollar. Obviously, the US-China trade deal getting sorted is excellent news for the Australian dollar, with 30% of its GDP brought in from trade with China. It's all good news. So the market will be eyeing this very carefully to get a new sense of direction, and you could well see a fresh movement out of this trade decision. So I wouldn't be surprised about that at all. So it's definitely one to watch. Canadian dollar trade balance, not necessarily market moving. We've got ISM non-manufacturing PMI. I would keep an eye on that simply because the manufacturing PMI, when that really dipped a few weeks ago, that really concerned the market, and we saw some risk off trading rather as a result of that. But as long as the US-China trade deal looks like it's coming along, even a small dip in the non-manufacturing PMI, or services PMI, shouldn't be too bad. It's an event that I'm not expecting anything significant from, but it is worth being aware of because it does have the potential to move the US dollar. And of course, the key thing to say is if the US-China trade deal looks like it's not going to work, and if there's negative news that comes in for the US-China trade deal, then in that scenario, what we're going to see strong risk-off trading. So we're going to see the exact opposite of what we're seeing now: Australian dollar weakness, New Zealand dollar weakness, Japanese yen strength, Swiss franc strength. So watch out for that. This is important, okay, for the Reserve Bank of New Zealand. The chances of a rate cut have gone down for the New Zealand dollar. And if this employment data is strong, the chances of a rate cut for the Reserve Bank of New Zealand will go down even further. So this is key. It's key for the near direction of the Kiwi, and it's key for the Australian dollar, New Zealand dollar currency pair. Really want to take a look at this. Let's just see if I've got the chart. Yeah, I'll just pull up the chart here. This currency pair is sort of stuck between these two levels in this like little short range between 10800 and 1.0700. So with both the RBA rate statement and some employment data out of New Zealand, we could well get some new direction on this currency pair. So one to watch. And definitely you can see the rejection of the 200 exponential moving average here, but it's not a great pin bar. Technically, it's that's not a pin bar technically, because for a technical pin bar you need an open and a close within the body of the previous candle. But you can see there is some tailing action. There is some rejection of that area. So we're getting rejection of the 1.0800 here, rejection of the 1.0800 level here, and near-term direction will be the combination of what the Reserve Bank of Australia says tomorrow morning, late tonight, early tomorrow morning, and what the labour data out for New Zealand. So then I'd expect to maybe get some new direction there. So look at these support resistance levels, breaks of these levels, retests. Once we get a clear picture, definitely it's a pair I'm looking at and I've got my eye on. Nothing to trade there at the moment, but there may be, depending on what happens with the central bank divergence. Going into Wednesday, we've got some service PMI data. Now, I just want to draw attention to the manufacturing PMI data we had today. Now, it was weak manufacturing data in the Eurozone that really resulted in a lot of Euro weakness recently. There's not much improvement here at all. The Spanish PMI was a miss. We also had a slight beat in the Italian PMI. Then we had French, German slight beats, and Eurozone as a whole, we just had a slight beat. The market pretty much ignored this today, and the euro traded in this very small range. But that's just because it's risk-on sentiment that is getting the focus, and you've got ECB's President Lagarde speaking later. So the euro is looking for this, okay? And you can see it's helpful on the Forex Factory. It's kind of got that in the red, and that's really the correct order today, because this is going to be more market moving than that. So how we're going to Wednesday, we see some services PMI. So this is the manufacturing PMI, this is the services PMI. You know, all this goes into GDP. So the market will be looking at this carefully and in light of what Christine Lagarde has said on Monday. So no, I think, look, I'm not expecting anything major out of this, but it's certainly a series of data points to be aware of, as well as some Fed speakers, Evans and Williams, speaking on the same day. Okay, Thursday, the big event is the official cash rate, bank rate out of Bank of England. But as is so often the case and has been for a number of months, I'm not expecting any rate change at all. I'm expecting everything to stay exactly as it is. The Bank of England is not going to want to change anything or do anything just before an election on the 12th of December. So it must be a question of simply how to keep things as calm as possible. You've got Governor Mark Carney speaking afterwards. Don't forget, just a general learning principle, whenever you've got, official cash rate, announcements being made, and then you've got the Bank of England or the bank's governor speaking half an hour afterwards, you got to see these as two, it's like two events for the price of one. Because sometimes you might get an event that happens, a cash rate decision, and then sometimes those moves can be reversed when the bank's governor speaks. So just be aware of that. In this scenario, I am not expecting anything market moving at all. However, it is just worth being aware of, nevertheless. Okay, RBA monetary policy statement, that will be, again, key. It will be eyed carefully. Has a turning point been reached? What is the path of rate cuts or rate hikes going forward? It'd be very unusual to have the Reserve Bank of Australia talking about rate hikes. But if you've got any, please excuse me, I'm still recovering from a little bit of jet lag from being in Dubai over the weekend. So please excuse my yawning. But this is will be eyed carefully. Where is the Reserve Bank of Australia at? So if you're trading the Australian dollar this week, make sure that you are looking at the rate decision tonight, and you are also looking at the monetary policy statement on the Friday. That's going to keep things, that's going to keep you on the right focus. Looking at anything else, I'm looking here, some more. Nothing particularly significant here. Then I think the next, okay, we've got some Fed speakers on Friday, and then the Canadian employment labour data. Now, that labour data is important. The general consensus is for 10,000 jobs to be added in October. You haven't got it on this calendar, but there's a general consensus of 10,000 jobs are going to be added. That was a fantastic jobs data report in September, and then it was 81.81 thousand back in August. So you can see jobs have been really good. Look for CAD recently, 81,000 in August, and then 53.7 thousand in September. And let's see the jobless rate. The jobless rate is at 5.5%, and that's expected to rise to 5.6%. So wage growth again has picked up again this year with Canada, and that's been supportive of the economy. Obviously, if wages go up, then consumption is going to go up, and that in turn is likely to push inflation up. So that's very good news for the economy. Now, if we get some, the risk here is to the downside for the Canadian dollar. The last monetary policy statement, the Bank of Canada said, there was some risks, there were some downside risks for the economy. Labour is going to be important. So in this scenario, if we saw a miss in these two data points, I would expect to see some CAD weakness. A US dollar CAD pair could potentially be interesting, but again, you also got to look at the price of oil, and that's worth saying as well. I want to draw attention to the oil markets. We have had some chatter this morning about production cuts. So you can see that oil has been bid. Now, oil was bid well into Friday last week on optimism about US-China trade deal. If the global economy is recovering, that's excellent news for oil. So that's why we've seen oil's bid. And now, this morning, we've also had some headlines, and these headlines have been talking about OPEC agreeing or talking about some further production cuts between OPEC and its allies. I think Iran was speaking about that, and there was another country that's speaking about that. So that's why we're seeing these strong bids into oil. So as long as those two scenarios remain, as long as OPEC talk about production cuts, and then as long as the optimism over the US-China trade deal is going on, expect to have buyers on oil with any pullbacks. Anything to be aware of, and this is now this is not something to chase now, because price has moved up into that overhead resistance level and hit that big round number. Remember, the big round numbers are significant. So you can see it's just literally hit that 57 level and reversed. Okay, so just to be aware of that, and you've got major support down here at sort of 55 and below. You've got some major support levels there, so I wouldn't be surprised to see some retracement from those levels. Okay, guys, I hope that's helpful for you. We'll just look at the euro-US dollar pair, because we've got Christine Lagarde speaking later. Again, you can see euro has been bid recently, and if we can see 1.120. So you've got some key overhead resistance here. So if there is any upside in euro, expect it to be capped around the 1.1200 level. To the downside, we've got 1.10800. So there's just two key support and resistance levels. We've also got minor support here at where is my got minor support level here. 1.113 is here, 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 and here. So, going into Christine Lagarde speech, you got areas of support, and then areas of resistance just overhead, which is, yeah, that's not a bad view of it. Resistance overhead, support. Oh, gold, Hashik. Let's have a look at it now. Let's have a look at gold. Now, interesting. You see, with the US dollar being a little bit weaker on Friday, we have had, these positive moves trying to break outside of this trend line here. Now, for me, for gold, there's a bit of a mixed picture going on, because, okay, the US dollar is expected to be weak. The Fed was a little bit weaker than perhaps the market was expecting. So we have seen some US dollar weakness. Let's just look at the Dixie. look at the dollar index. You can see the dollar index weak, falling down into this towards this 97 level. We've got a slight retracement here, but the general picture for the dollar index is a weakening of the dollar. You can see it's fallen down heavily there, fallen down into sort of a support level just above 97. Now, going back to gold, what I was looking for around this time here was when the Fed was having their rate decision. You know, I was thinking, okay, that you got a bearish reaction here, but if we get a dovish Fed, then we can expect to see a gold breaking out. Now, however, we have had not exactly a dovish Fed. It's more like a Fed that isn't going to be hiking rates and is going to be data dependent. So that hasn't been, you know, massively strong for the dollar. That's seen some dollar weakness. Gold itself, it's typically bid on risk off sentiment as well. So at the moment, with all the risks on sentiment, I'm expecting to see, you know, some potential falling back down to this level. So I'm not confident with gold that there's a clear directional driver. You got a bit of a mixed message. We've got the confusion of we're now in risk on. Yes, we have got a weak US dollar, but you know, how weak is it, and what's the next lot of data going to show? So for me, you know, if you had to put a gun to my head, which way is it going? I think gold is heading up. Okay, but that's all going to depend on what happens with risk tone. So I wouldn't be surprised to see gold pull back down and retest this sort of, you know, this broken trend line here. So I wouldn't be surprised to see a breakdown here and another retest at that level. So it's going to be risk sentiment that's going to determine gold, and also the pathway of the US dollar. And I think, you know, we're at a bit of a crossroads at the moment, and the jury's out as to what's going to happen. Okay, guys, don't forget, tomorrow we have a workshop, and we'll be looking at some, you know, ways of drawing entry points on the charts and how to go about, you know, placing entries, exits, etc., etc. That's the week ahead. I hope there's plenty for you guys to think about, and I hope there's plenty of events that you can keep focused on. Okay, guys, you have a good rest of day, and I hope to see some of you tomorrow. Thanks now. Goodbye.